is money. Now, in the world of fiat currency, money is simply a government IOU. For an economic system as complex as the global macro economy, some feel uncomfortable about the fact that it all essentially rests on a bunch of IOUs. For investor Peter Schiff, this is dangerous territory. Now, Peter is bearish on the future of the U.S. and the dollar, and he's a big fan of gold and other precious metals. But it also turns out that his precious metals company has selected BitPay for Bitcoin payments, making him the largest gold dealer to accept Bitcoin. Now, I first asked him what led to that decision. Take a look at what he had to say.
Well, you know, there are a number of people out there that own Bitcoin, and most recent price of Bitcoin is, in the market anyway, worth about $500. And so there are some people that are sitting on, you know, considerable fortunes in Bitcoin. There are people that got their Bitcoins when they were just pennies a piece, dollars a piece. And so, you know, there's a lot of paper gain. And I think that among the Bitcoin holders, there are a lot of people that are skeptical of fiat currencies. They're fearful of inflation. That might be what led them to Bitcoin in the first place. But I also think those same individuals might want to have some money in gold and silver. Maybe they don't want to have such a big bet in Bitcoin, especially since they might have such large paper profits, and maybe they want to take some risk away, because who knows? I mean, I'm still very, very skeptical about Bitcoin's long-term value. I haven't changed my mind. I don't have a lot of faith in its future value, so I don't think it represents a good store of value, but I do have a lot of confidence and a lot of faith in gold and silver. And so, you know, I want to make it easier for people who own Bitcoins to take something off the table and to turn some of their digital currency into real money, gold and silver. And by, you know, partnering up with BitPay, it makes it very easy, because the people with Bitcoins can use their Bitcoins to pay, but I don't get the Bitcoins. I get dollars. See, I'm not really accepting Bitcoins. BitPay is accepting Bitcoins, and they're turning around and giving me dollars. So my customers get to pay with Bitcoin, but I get dollars, which of course is what I need, because I got to pay my rent, I got to pay my salaries, I got to pay all my other expenses and my taxes. So I need dollars when I'm running a business in the United States. I don't need Bitcoins.
Now, palladium is at the highest since 2011. So are you keen on that metal?
Well, I'm pretty much keen on all metals. I mean, we've had a very, very big run in palladium recently. You know, we've had big runs in palladium before. It's historically a very volatile metal. So I don't know if I'd be plowing into palladium just now, you know, when you've had this big spike up. Maybe I've been, you know, advocating platinum for some time. That started to move for a while. Platinum was actually priced under gold, and I thought, you know, that was a particularly attractive buying opportunity for platinum. But, you know, I'm bullish on commodities in general. But the reason I am particularly focused on these monetary metals, these precious metals, is because I see a real monetary crisis coming. And I think a lot of people who have placed so much confidence in central banks and their creations, fiat currencies, I think that when that confidence is shaken, there is going to be a global rush back to real money. People are going to rediscover the value of gold and silver as money. And, you know, millions and millions of people that don't own any are going to have to buy it. And certainly a lot of people that have significant paper fortunes are going to have to do something to preserve what's left of the purchasing power, and they're going to have to go into gold and silver. So I think that these particular commodities, given what's coming, are going to do even better than just, you know, industrial commodities, agriculture, energy. They're all going to go up. But I think that the precious metals, based on the monetary premium that is right now missing from these commodities, but I think will return, I think you have a particularly a good opportunity for appreciation.
Peter, I want to backtrack really quickly. You said before, when we were talking about Bitcoin, that you needed dollars to pay your taxes. You know, kind of what you're getting at, the idea that you need this money. It's an MMT theory that you're going back to. You don't see it that way?
No, I mean, I'm just operating a U.S.-based business, and my expenses are all in dollars, and so my revenue needs to be in dollars. Now, to the extent that I generate a profit, which hopefully I do at my precious metals company, which is where we're accepting Bitcoins, to the extent that I have a profit, I'm not going to keep my profit in dollars. I'm going to convert my profit into something else. Maybe it'll be gold, maybe it'll be stocks. But it's not going to be Bitcoins. I mean, I have no desire to hold Bitcoins as a long-term investment, but I don't want to hold dollars either.
But you're converting your profits 3 times. No, you're first getting it in Bitcoin, then you convert it to dollars to pay your taxes, then you convert it to...
Well, no, I never get Bitcoin. The customer has Bitcoin, and going through BitPay, the customer, it transfers his Bitcoins to BitPay,
right.
And then BitPay gives me dollars. So I get dollars right off the bat, which is that's my cash flow in my business. And then my business pays its operating expenses, all of its overhead, its salaries, everything else. And then we pay the taxes. Then whatever's left over is my profit. And that I can invest how I see fit. And I'm going to invest that in things that I think are going to preserve their value.
You recently got into it on CNBC with famed NYU economist Nouriel Dr. Doom Rabini over your prediction that the Fed's monetary easing is pushing the U.S. economy into hyperinflation. And you said, quote, falling prices do not threaten consumers, but consumers benefit from falling prices. And Nouriel responded with, what you're saying about deflation is nonsense. Now, you are both very high-profile bears. So what is it that you so fundamentally disagree about on this issue?
Well, first of all, Nouriel's not a bear. I mean, he's actually pretty bullish, and he has been for a while. He's bullish on the stock market. He's bullish on the dollar. He's bearish on gold. He's bullish on the U.S. economy. So I don't see why he even still has that moniker of a Dr. Doom. By his own definition, he's Dr. Boom. So, we don't have that in common. He might have been negative for a while, but he's certainly not negative anymore. But, it's Rubini's ideas that are complete nonsense, that consumers benefit from higher prices. I don't know any consumers that want to pay higher prices. The lower, the better. I asked Nouriel Rabini several times. He wouldn't answer my question because he said to me that if prices fall, people will stop consuming. Nobody will buy. And I asked him to give me an example. Tell me one product that people will hold off on buying because they think if they wait a year, it'll be 1% cheaper. And he couldn't identify a single product. I mean, it's just not true that people put off their purchases if they think the things that they want or need will be a little bit cheaper a year into the future. People want things when they want them, and they buy them when they want them, not a year after they want them. In fact, Americans want to have stuff right now so badly that a lot of Americans use credit cards and pay 18% interest. Why don't they just wait a year, save their money, and save the 18%?
Well,
because
Peter,
they don't want to wait a year.
Not on
they got the stuff right now.
Not on credit cards, but one that I can personally think of. I'm not Nouriel Rabini, and I never will be. But housing. People wait to buy their homes if they think the interest rates are going to be lower.
Well, but that's a little bit different. That's an asset, like a stock or a house. If you're buying a house as an investment, right? If you're buying a house because you want to make money on it, then clearly if you think prices are going to go down, you'll wait, assuming you have a place to live, assuming you have an apartment or a house that suits your needs. But if you really need a house and you need it to live, even if you think it's going to go down a little bit, you still might buy it right now because, you have a family, you need the space, you want to get into a certain school district. But you're talking about assets. Yeah, if I'm thinking about buying a stock, right? If I think it's going to go down, if I think a stock's going to be lower in a year, then why would I buy it now? I mean, I'll wait, I'll buy it in a year because you're buying it as an asset for appreciation. But if you're talking about something you want to consume, right? If I need a new cell phone, am I going to wait a year because it might be a little bit cheaper? No, you just buy it when you need it. You're not going to wait to buy it.
That was Peter Schiff, CEO and Chief Global Strategist of Euro Pacific Capital. Time now for a very quick break, but stick around because when we return, we're bringing you part 2 of my interview with Dr. Paul Craig Roberts. Roberts tells us his view on the future of the U.S. dollar and its status as the world's reserve currency. Then in today's Big Deal, Edward Harrison and I are discussing New York City's taxi cartel battle with the massively disruptive transportation app Uber. But before we go, here are a look at some of your closing numbers of the bell. Stick around.